Good morning, everyone. This is Rose. Today is October 10th, 9 a.m. Eastern Time. Good morning. Let's just wait a little bit more. Let's begin. Monthly chart. So far, the first week of October is done. We have 3 to go. And we are bouncing from this trend line. Okay. And this area of interest, we finally tested, and the trend line is also holding. So market may want to go up a little bit, but there's a breakout test area right here. So there's a little bit of gap that we're trying to get to, but the whole area is a gap from the close of this bar, monthly bar, so August, and then the entire wick, and then the September body. That area is actually gap. So the market is probably trying to go up a little bit, but there are probably sellers waiting there. So we have a leg 1, possibly pull back. We might get a leg 2. We might need to test this area one more time, or we're going to keep going. Probably the 50%. We might actually test the last month's mid-range. But it is right now, some buyers are trying to buy here. Hard to say, it's because too early in the month. I do have a measured move target from here to here. We do have 2 legs down. Market, this is a buy signal bar. The problem with it, it's a small bear body, but you can see the bullish pressure started with September 27 on the weekly bars. This bar last week ended up pushing the price up. So bears want a double top. I'm not sure if we're going to get it here. We might need to go and test the August low, August 18 low, before we actually find sellers. So you can see on the monthly why this area is important. This is the August low, and we might need to go up. And there's a gap to the EMA. We have a gap bar, so market may want to get back to the EMA. And then we might actually be up and sideways for a while. We might even get the 3rd leg down. So we might need to test this area for the 2nd time. Here's what could happen. If we go up and finally come back down, okay, so market will try to test here, midpoint. If we get a higher low, the market could bounce. We could get a double top wedge, okay, truncated possibly, neckline, and we might go and test this area, okay. If we get above it, 1, 2, 3 wedge, and we get a wedge failure, market could still go and test the highs of July, okay. So, but obviously this is weekly. Market needs to do a lot of work, so we might actually go up and sideways. And I like to see a test of this area, at least try to come down, give us maybe a double bottom, higher low. And that'll be a much better, I think, buy rather than going up, trapping everybody coming back down. Even if we go here, I think sellers are waiting there. Up lower 1/3 of this strong bear trend bar, this one, sellers waiting. I mean, I'm not sure if we're going to get a double top with September 27th, but I think we might need to breach that a little bit and then maybe get some kind of a double top there. But even if we do get that double top, so we come down, okay, then we go back up, that would give us a triple top, which is a wedge top bear flag that could sell with a lower high. Then we test here. If we get a failure, okay, failure of a bear flag, and we get some kind of a wedge, okay, then I would look to see if we can actually go up from there. But it would be better if we can really test this area. Anyway, so on the daily, last week I kept saying that we're going to be testing these highs. Look what we did. This is the outside bar, followed by an inside. So you have I, okay? And the trap of the bears. Once the bears are trapped, market buys. It's a strong buy signal bar, but you're buying into this trading range. We got magnets above, which is the EMAs. Gray is 150-day EMA. This is this is SMA. This is 20 EMA. So those are all magnets, and the market still has room. We are at 43.73. The target is 43.82.75 or 83. Now, after hours, what did we do after hours? Let me see. Did we test that? 83? Nope, we did not test 83 yet, so I think that's due. Market may want to go and test and finally come down from it. That will put us into a trading range, okay? Sellers want to test this area. If we do trap, these bulls will try to take profit. But look at this bar. It's already breaking a small structure here. So you have a measured move. Now look at that measured move where it lines up. I mean, I didn't do the stellar measuring there. Obviously, nothing's snapping to the edges, but you see how 43.83, 43.84, we might just go a little bit above, and that will be the measured move, and we could come back down. But we do have a gap here. If we do come down and test this gap, there will be buyers waiting, and then we could start buy, breakout, follow through, maybe a small pullback even, I don't know. But if we do dip in this area and test this area, keep this gap open, we're going to go up some more. Okay, so you can see that. Why is this not working? My keyboard is unresponsive. There's always something every day, let me tell you. I'm going to have to use the application to cancel out. Okay, so that is the measured move. We're still trying to reach, given how bullish was yesterday, and a breakout follow through, but testing the highs. We still have sellers probably waiting there. Maybe sellers who sold here with two legs and trapped will probably going to sell up here, and getting there would be possibly profit taking. Might need to come down. That pullback, we could buy and look for a second leg up. Where could the second leg take us? September 22nd, a high. This breakout test, August 18 high. I think that's where the market is trying to reach. I mean, we're so close, we could get there. We can even get to here, but if we cannot close this gap, we would end up being in a much larger trading range, and we could just rotate in this for a while. So, yeah, I think this gap area is exciting, but this breakout test, 43.99.25, or the low of August, we have not tested thoroughly. We have mitigated a little bit here, but we need a thorough test and come down, maybe even a test again. If we then fail and start to go higher, I'm going to be targeting this gap close, and I'm going to look for a market to get us to the 44.44 area, possibly higher. Okay, so we're going to test above the 20 EMA and 150 SMA thoroughly before even coming down. So I'm looking for, at the open, possible follow through for bulls. Now, why is that? Let's take a look at the hourly. This is last week's range. We've already broken the last week's highs. We've pulled back to the 66% or 33% pullback, either or. Same thing, same distance. I think I started to measure from here to there. So that's a 33% pullback. Breakouts, not a good follow through, but market is trying to reach here. But this is not a good breakout. This is a breakout pullback, and the bulls kind of stop there. So you have a strong trend kind of going in to some kind of a trading range, but it's because buyers are buying the first bear bar they see. Okay, they want to test the high and they want to keep going higher. But we'll see if we get a double top here, or we might go sideways a little bit on the hourly and then break out and then come back down possibly. Or we're going to reach this area and then come back down. So I'm eyeing this 43.8375, and maybe a pullback. But if bulls want to keep going higher, really strong. But we do have 1 pullback, 2 pullback, 3, or count begin here because we had 1, 2, and 3 double bottom. Now we have higher lows. We're in a swing. Where can this go? This is failure. Another failure, failure over failure. What does a failure over failure do? What does it produce? Who's going to tell me? What happens when you get a failure of a failure on a chart? Whether it's a 5-minute, 1 hour. What comes after failure of a failure? Very basic Albert's concept that you can apply to anything at the open, midday, micro or macro price action. Yes, but the answer is you expect a swing with 2 legs. That is the answer. Okay, so that's your swing, first leg, pull back, second leg. Okay, so what is this done? We might get a complex leg. The second leg could be a complex with 2 legs. So I'm going to look for, see if we can actually test this area before coming back down. Like I said, on the daily, 83 to 84 is measured moves. I think that's where the market is trying to go. At the open at least. And then we'll see what happens if we can get a failure is at the high of yesterday. Okay, so if we get a, the first hour, we always test the high at the open. We test the high of day or low of day. So since we're so closer to the yesterday's, which is this high, we're probably going to go test maybe 1, 2, and 3 push, and then start to come down, maybe make a higher low, lower high, and we'll see what it does. Right now we're in some kind of a trading range trying to get a breakout. Okay, so on the Globex charts, the range is very shallow. Nothing so exciting here. That's only just about 15 points. So we're probably going to double or triple this. But look what happened here. This is a bad price action. And not only that, we have a breakout test area. Market wants to test. So we could have we already have a spike and channel. This is the pullback. Right. We already made 1, 2, 3. Market wants to test and maybe trap the bulls. If it does come down, we might end up testing here. So we might go up, we might come down, and then we could actually bounce. And this is a breakout test. And if we do start to come down, we have a really bad price action here. Something happened too fast. We don't care. But it was very powerful. So when we get there, market wants to probably correct this. There's another important area right there. Buyers waiting. Okay. I'm not sure, but we'll see. First, I'm going to look to see if we can actually get, or do we have a double top here? We do have a wedge top and a double top. If we get a lower high and we cannot go and test, pardon me there, if we cannot go up and test the highs and trap the bulls, and if we have a lower high here, then we could start selling into 58.50, 46.25. Market is trying to correct this imbalance right here, so therefore 46.25 could be a test. I don't know right now, but right now the bulls are trying to get a V-shaped correction or rounded bottom with a double bottom, and they want to take out this. So we're in a trading range. We could go up here But if we do that, then wedge, well, is this a wedge failure? I don't think so, because 1, 2, 3 double top, it already sold with 2 legs, okay? So maybe we've already completed this, phase, and we have a double bottom. So there was a bear flag, totally failed. Now look at here, first entry short, second entry short, failed, right? So we have a failure here. There's also a failure here. Second leg, bear, and bears didn't get a follow through, double bottom, market double bottom. So this is a failure of a failure trying to get a 2 leg. So here's your first leg, pull back. I think the second leg will actually go high. Now yesterday's high is right here, and you can see we are already slightly above that. So we're going to open above that high, most likely, if this keeps going. Okay, so this week, let me see, lots of, Fed members are speaking. We have Rafael Bostic is scheduled at 9:30. We have wholesale inventories at 10 o'clock. I'm not sure what else is there. Bunch of bill auctions could bring in some volatility on every hour, ETH and RTH. So we might get a butt or two excitement. Then 1:30, Christopher Waller is going to speak. Kashgari is going to speak at 3. And then later, after the bell, we don't really care about that, but you can see it's a jam-packed. Tomorrow, I don't think I am scheduled for tomorrow. Oh, I am. Oh, okay. So I am doing FOMC minutes in the afternoon. Tomorrow morning is going to be Tim Stout with his measured move, 1 hours and 2 hours wizardry. So he'll be in and doing all that covering in the morning. I'll be in the afternoon. And then Al Brooks will come in on Thursday. And I'm back on Friday morning. Brad is absent due to his traveling. He's in Europe, if you have read from the blog. But he will be back next week. Okay, so starting on the 17th, Tuesday. So anyway, so we have earnings season kickstarted. We have PepsiCo actually reporting. It's due. Some big banks are going to report their quarterly results later this week. Mega cap growth stocks, including Apple, Microsoft, Alphabet, Nvidia, Meta, they were all trading actually slightly higher, and you can see why. Yesterday was beautiful bull days, which I'm going to touch base on. There's still 10 minutes of yesterday's price action. What else? Okay, so let's see. Right now we're in a trading range. So within the Asia range, you can see we have trapped the bears. It kind of looks like we have. And we have trapped the bulls. So market is deciding what to do here. This is a really nice go long, but I'm not sure because of this double top, wedge top, double top. This could still turn into a lower high very quickly, trap the buyers, and then come in here, and then trap the sellers, and then come back down and come back up and have another go. I'm eyeing this area. Okay, so you can see the day before. Okay, so we have Friday and Monday, back-to-back strong bull days, right? Although this one went into some kind of a trading range, which is normal because it needs to pull back. You got a strong leg up, pull back. You're looking for 3 push up and a lower high double top. Market came down. Okay, so it's a bear flag right here. It wants to test some lows before going back up. So it's going to try to trap the sellers as possible. And here we started with already testing this low, 38 low. This right here, there's a little bit of gap here. I pay extra attention to these areas. Here we go. So I'm going to measure that. It's a bit of a gap right there. Okay, it's important. I look for those gaps to see what market is trying to reach. Okay, and we've tested that, but there's another one right here. That wick is gap, so I'm going to take this look. Bar 1 and 2 tested that area, okay, and then went right back up. You got bar 1 and 2 overlapping, but there's no bear bar, okay? So it's not like we trapped the bulls here and everybody thought that they got trapped, but you're selling too low if you're trying to sell. Now buyers already bought, and then they managed to close bar 2s on its side, and you got a breakout bar, slight breakouts, not all that great, but bar 2 is actually showing you something there, which is filling the upper wick of bar 1. That right there is to me momentum for bulls. So it's trying to go into possible, so if I can take this whole area, possible 50% pullback, which is somewhere there, right? So if market is going to go up with 2 legs to some kind of a magnet, there's a breakout test, breakout, test, and then breakout to downside. We're going to test that again, and we just tested. Not all the way to 50%, but it's so very close. You got leg 1, pull back, leg 2, that's low 1, failed, right? So you got a low 2, also failed, goes back high, but fails to break out, then comes back down. Now what am I doing here? Then goes back up. What am I doing here? Then comes back down, then goes back up, then comes back down. What am I doing here? I'm counting 5 reversals. 1, okay, 2, 3, 4, okay, and 5, or you can take the whole thing as 5, right? So then we finally get a reversal. You get a double top at the EMA, that's low 2, sell, expect 2 legs down, test of the lows, possible gaps, which I found, look at that. Then the bears is getting a failed breakout, strong bull bar. I mean, bulls might have already started to buy, but we need a low 1, and I generally look for some kind of a failure to see if I can actually enter with that. Well, 18 is that failure, and a confirmation of failure is 19. So everyone's buying, but I'm still looking for low 2. Everybody gets the low 2 failure right there, they will start to buy. If they haven't bought the 21, because there are sellers above 20, probably is, right? If they sold the close of 20, they're going to sell again. They get a break even, and at 22 you can actually go. So that's my keyboard is really messing with me today. Okay, that would be my 1-to-1, or you can just simply measure this leg, and that would be your 1-to-1. And then you have 2-to-1. I'm not sure we got the 3-to-1 there because I remeasured. But there you go, 3-to-1. Beautiful. Now, I expect every time market comes to 3-to-1, there's something happening there. Okay, so when you get the 3-to-1, if you do not get a bull bar closing immediately above, I generally look for a 2-legged move back, because everybody who sold earlier needs to sell again. They might be selling maybe from the high of bar 7 or 12. They need to get some kind of a break even or closer to break even. They will sell the 36. So I can see what the bears are trying to do. If they have already sold 16 close and they're stuck and they sell the 36 close and their break even is right here, what are they going to do? They might have sold the 26 and sold again. They're going to get a better average price, much higher than the 50%. But because they sold some here at the highs, right? So, and then they sold here. Now that's a little bit of advanced measurement, but I'm going to measure. So you have here, right? They sold it. That's your average. So now, if they sold here from this average to that 36, they sell again. Did those bears actually get out? Yeah. Look at that. That's how I measure it, to see actually, are they really getting out? That's their calculated much better average price, because it's the second time they're scaling it with 36, 26, and 36. Once those guys get out, okay, so what happens? Obviously, we're never going to come down here because that's the recalculated average price. We get one tick below, everybody gets filled. Now market is going to go higher. So what happens then? This is important. Now I'm looking for a bull bar to get above the 3-to-1. This is why 3-to-1 is important. Either the bulls are going to give up or they're going to start selling. Okay, they're going to exit out. Once they completely exit out, you start to get huge bull bars. Look, rally, pull back, first sell. It might even be a second sell. And we get a trap. And bar 44 is a phenomenal signal bar right at the EMA. Okay, so market is going to go. Here's another way. If you are difficult, if you're having difficulty figuring out when the swings are coming, I'm going to show you guys something very simple. Okay, so you have EMA. Market makes a low. Pay attention. Market makes a low. Comes in and makes a low, right? It's actually not the low. Then it makes a new low. I call this a lower high of lower low. Okay, and then market starts to go. It's like a head and shoulders pattern, but sometimes it's very difficult to find those inverse head and shoulders patterns. Okay, what happens is that you get a little bit pullback or tiny, as long as we are above that lower high. Okay, so I look for a market to go above the EMA, give me a good signal bar to buy. Generally, you won't get it. Okay, we might dip again. Everybody's selling, but as long as we do not take out that low. Okay, so now we have a much better low, higher low. I'm sorry, this is a higher, not lower high. I need to take a sip of my coffee. This is a higher low. So I'm looking for a higher low. Then I'm looking for that second entry long in the form of like this. I'm going to buy this and I'm going to target the prior highs. Okay, so watch this. Look, we got one, but then a pullback. Some will buy this, but then we come back. That's what I'm talking about. We get another one that is very significant after the 3-to-1. I get this. I'm going to buy it. I'm going to target this high, which is a gap bar. If the bulls are taking out a bullish gap bar, that means we're going to get a measured move. You can measure from here. You can measure from the entire opening range. Whatever you do, just measure for bullish targets. So I no longer need this. My opening range, 6 bar, I'm going to measure that. That was 1-to-1 target. Now here's a 2-to-1 target. We reached the 2-to-1 target. So either you can measure there or take the whole range. And then we finally come down. We had a spike, pullback, and a channel, but wedge top. So expect 2-legged or 3-legged move. We get a 3-legged move. And 20 bar gap, and the market actually found support. You got about 3 bars, 1, 2, 3 bars closing underneath the EMA, and then the bulls show up, so you can buy again. And then we close above the EMA. So closing above the EMA market is bullish. 50% of the time, chance it wants to get a follow through bullish move to the highs, and in the first hour or second hour, it might get a 75% chance sideways and down reversal, or the 20% chance we might actually get a breakout or reversal from the open. So let's see what happens here. We're testing the high of yesterday. high of yesterday. I like to wait for bar 1 and 2. Gives me a lot more information. Yes, there are more gaps here, John, but right now I'm looking to see which one is the first, right? There's one, already bulls showed up. There's another one. So we're having a failure to break out. Yeah, you can mark those if you like. That's fine. But we could be in a much bigger, okay, so here we go, trading range. We could actually measure this. Bulls got a measured move target, 4,400, 4,401. There's gap here. I always like to look at the, I always like to look at the line chart at the open just to see, look at this gap. Look at this huge gap. That's a breakout test. We will eventually come down and the bears are going to try to close the gap. There's probably 1, 2. We're making the third push up. If this push up actually creates another gap, market could go up a little bit more before coming down. So you can see how bullish it is at the open. Oh, I love that rose gold. That's very festive, Peter. Nice. You'll do great. I mean, I think you should read the books while you're doing all of this, Peter. If anybody's taken the course, I would really recommend you guys to go back to the books. If you have read them, maybe just go back and get a refresher, or you haven't read them, now is the time to pick up the books and start reading. You're going to be very excited about the information that you'll be finding in the books. I mean, I've read paragraphs from each, but I've never finished the books, I have to admit. Every day I'm still reading. I'm reading. I wake up 4 a.m. in the morning and I read. I wake up over the weekends, 2 a.m. in the morning, I read. Over the weekend, I spent every day at least an hour in the morning and an hour in the afternoon spending time in the books. It just, you're being bombarded with so much information, but it's kind of important that you have to go back and read and really learn the thinking. But once you learn, you don't forget. All right, so we have a doji bar at the high of yesterday. If we get a second bar, it has to close on its side and it has to close with a strong bull body. If we fail to get that, that won't be all that good. So we are at the open of the day and high of day, almost the same price, but not necessarily. There's a difference. Open of the day is slightly higher than the high of yesterday. So we opened higher. Even if it's a 1 tick, we have opened higher. That could be saying something. If the bulls actually get a second bar that is strong enough, then we will go higher. August low is still the magnet. But what happens if we get a bear bar here? Then the market will try to come down and maybe close this little gap right here with the close of yesterday. Wants to test. So I'm going to do nothing here, but there's no trend bar at the open. There's a doji. So now you have another doji. So if you look at the ETA chart, it's actually inside, outside, inside. It's, look what's happening here. This is the 5-minute ETA chart, right? This is the bar 1. They bought right above this bar already. They put a buy order, and if they put a sell order here, that's not a good place to put a sell order. It could come and get you. Your sell order should be here or here. I would put it right here because that's the last breakout. Or you can put it here. That's the last breakout. Have a bad follow through. So that's why this area and that area is important. Anybody who put their stop here, they're disappointed. They're going to have to be forced to enter again. Therefore, we could end up getting big bull bars. But if you put your stop here, you get another bull bar. Those bulls who entered above this bar right here, will add more to their buy orders, or they have buy orders waiting above the bar 1 high, and they're waiting for a strong bull bar. Seriously, why it's not working? Okay, never mind. So let's see. So this is why I said if we get a second bull bar, it would be ideal for bulls right here. The goal is to get to the hourly breakout shallow target, 83.75, or 1 tick above 84 that I found, which is a measured move, or the mother bar, inside bar, OII combo on the daily is trying to reach the measured move target 200%, which is also 83. So we might actually go above it a little bit. We'll see. We need a good bull bar. What happens if we don't get it and we have a micro double top and we get a bear bar instead? Well, I'm doing nothing here because this is very confusing. We're at the highs. It could fail. There's a little gap here. The bears want to close. All depends on how the 2 closes. If the 2 closes bearish, we're all the way at the highs. We could get actually bears coming in, and we might actually test this low, which is support, before going back up again. So I have done nothing because it's already a mess, right? And so here's what happened here. Everybody bought above it. Maybe they have gotten a 1 point there. I don't know. But let's see. If you bought 1 tick above, 77.75, 78.75, 79, see, they didn't make a 1 point scalp there. They are failed. This is a failure. So, and it comes down. These bulls, they couldn't even scalp a 1 point. It comes down. It hits their stop here. Now, if anybody entered with 2 contracts here, they're going to have 3 contracts or 4 contracts here. So they try to make money in case this reverses right away. Then now they're also upset. So they're going to sell the highs again to break even with bar 2, and that's what they're doing. So these bears automatically sold, first exited with a loss, and then sold underneath the same bar. Okay? We're trying to make money, totally failed, so they're trapped for the second time. They might sell this time to break even. So bar 2 is a break even, but it's also a good close. So you have an inside, outside. It's actually a O, it's IOO, and then IOI. Let me get back to the RTH. Good close 2, but it's an inside bar. Market is trying to test the bar 1 low, trying to get a breakout from the bar 1 low. Where's the breakout? You can get the breakout targets if you're looking for a quick scalp. I don't like this, but there's a 3 bar breakout now for bears. Okay, they're trying to get a breakout so they can come to this blue line, which is 1 tick under close of yesterday. But if they fail, that's because there are buyers always waiting below the outside bar, trying to trap because it's a bullish market. So I didn't sell bar 2. If I were to sell bar 2, it would be to sell the close, and I would take profit at bar 1 low. Okay, so this is why it's very confusing. It's basically 2 dojis. One of them is inside. Anybody sold here underneath bar 2, put their stops there. But it's so dangerous to sell because outside bar is a bullish bar, even though it's a small body. So I know there are buyers waiting to trap. That is the first trap. If we get a bear close, then there's a chance that we might actually test this line, might come down here, may even test right here. But this has to close below the studded line, which is the mid-range of bar 1, and it has to close bearish, and it has to close to either to close to the bar 1 low or suddenly dump and close outside of bar 1 low. That would be a solid breakout, okay, for bears. Then they would look for a quick scalp here and follow through targets. But if I don't see it, I have no intentions of selling it, because we will go back and test the bar one high and break above the micro double top, and then the bulls want to get back is up to here. There are some, this is the trap zone still from here to here, and we already tested trap zone. Bulls already got trapped there, so it comes down. Now we're testing the lower trap zone, and bulls were here, trapped the bears. Now we're trying to go here. This time we could breach and test here before we test the shallow target. So be prepared. But if we're probably going to get a volatility, and we're going to test that upper shallow target, which is right there. Okay, yeah. So I am not short. If this bar were to close bearish, then I would have said to you, do this with the stop above. This would be your measured move to the 100%. It's actually a measured move of the outside bar one. It just didn't happen. So bulls now trying to break above bar one, right? So they're trying to get a breakout. It's very confusing. 3 bars overlapping sideways. You may stay out of this if you're worried that this isn't going to work. And it's very difficult. I haven't opened any trade. But if I weren't talking, I would have had a buy order right down here underneath bar one, okay, or closer to bar one low or slightly under. And I would have already scalped at the midpoint or this green line. Now, in order for me to go long, I need to see bulls actually close above this green line with a bull body. Then these are my scalp targets and a measured move target, which is right here. If that fails, then the bears are going to try to close below this green line, a bear body. If they do that, we have a higher chance of getting a breakout finally for bears. So this is why it's confusing. I see an outside bar. I immediately measure its range, and I look to see, what is happening within that range. They will try to trap you. This, what you're seeing here, is a barbed wire. Barbed wires ranges need a little bit of space. We don't have a confirmation of barbed wire. If the bears want to sell this, they have to close a really strong bear body after a second leg. Here's a leg 1, pull back leg 2 in the barbed wire. That would be your confirmation to sell, but we don't have it. So now look what's happening. We tested that 21%. Which is that green line. I'm sorry, it's upside down. I made a mistake there. Here. We tested the 21%, but we did not close a bear body, right? So what does this mean? We're not all that bearish. Buyers still trying to buy. Now, if we close above 79, we're definitely going to go here, here, possibly even here. Okay, so this is where if you want for bulls any confirmation, then leg 1 pullback, leg 2 failure to close the gap. Bulls are keeping the gap open. If they close a bull body right above the 79%, they're going to go to the 111%. Some sellers are waiting there, and they're going to try to prevent a breakout, but it could be too late because there's already volatility. ATR is 5. Bulls are trying to get here. This is the race. They're trying to get there at the minimum. And then the 83, this is the actual first target. In fact, I call this a first target, but it's a shallow target. Okay, so let's see. Well, we haven't really tested the EMA yet. We have 1, 2, 3. Can we get a lower high here? Micro double top. If we get a lower high, then sure, I want to see a bear bar closing below the 21%. I'll sell into here, here, but I don't have it. So I think the bulls are still trying to go higher. They just need to close a strong bull bar above the barbed wire or somewhere around the high. See, decision has not been made. They're still trying to trap. There's nothing closing above. Bears want to come down and test here. They want to get a breakout. Very difficult to trade this. We're at the highs. Bears trying to close below the open of the day, below the high of yesterday, so they can turn the market bearish with a wedge top, but I think bulls are in a swing here and they want to get to here and there. So I'm going to wait for this body to close. If they fail, they fail, then I'll look to sell, but I don't even have a good close yet. So it's a new high, high 1, okay, bulls 1, high 2. High 1 is getting faded. Bulls still trying to close above the 77.25 or 77.50. If we get that bull bar, they will shoot up and take out the 43, 80.25 to 80.50 first. If we don't get any rejection around 79.75 or 79.50, which is right here, the studded gold line. But since it's, okay, ATR came down from 4. You can see we're stuck in this. This is a nice confirmation for bulls 4, but the upper wick is a problem. It's actually bigger than the lower wick. So they're trying to show us some momentum by filling that upper wick with bar 5 body. The goal is to get here, so is, or 10-point bulls is 80.25, which is right here. So it's same target, which is 10-point right there. You can scalp 80.25 if you like. If you're bullish already, that's where I think it's trying to go. But if we actually overshoot it, 83 is where they're trying to go. And then the measured move target of outside bar 1 is just about 85.25 to 85.50. Just about 85.25 to 85.50. So there's room to upside to 80.50 area, 80.75, 80.50. We should get that 10-point. I am long. I want to see a little bit of move to the upside here. Go, 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 go. Come on, go get it. If it fails without testing, that's a bad, bad, bad sign for bulls. If we get a breakout, but fails to test or tests but cannot get above, and we suddenly get bear bars, we're going to come down here very quickly. This is why I have a habit of scalping a lot while swinging. You never know. S&P is known for its back and forth, especially the early hour of open is very volatile. You never know. And the news is coming in about 8 minutes, so I think market. See what happened there? We just tested the upper trap zone, but the bulls are still trying to get my first target. So we came so close to the 10-point, but it doesn't count because it didn't really test it. So I'm still green. I'm looking for follow through. What happens if we close a bear bar? That becomes a failure, and the bears can close below the midpoint and then sell very, very quickly. But I doubt it. I think we're going to reach here because they already done a terrific job showing us momentum here. So 80.25 is solid 10-point, and we have not tested. We tested 1 tick below. It doesn't count. We should test it. And some machines are giving themselves because it's giving themselves profit because it's the top of the trading range. They're spooked, so they're taking profit as quick as possible. We're so close to the Globex high. Remember, Globex high was only 15 points. If we can break it, we can actually double it and get a measured move to the upside. And if we get a really nice bull body closing, that's your measured move to the upside. And with the news, maybe we would get there. Well, right now the minimum scalp is 2 points. Look at ATR. The half the ATR is, there's a 2.25 there, so you can actually scalp 2 points in a quarter. Half the ATR is actually that. there's room to the upside for bulls. This is the target, measured move. First this, I want to see a bar actually close above the shallow target to prove that the bulls want to go higher, or confirms. So far we have a breakout. We have a solid breakout, even though it's weak, but it's there. So therefore bulls are going to get the shallow target most likely. So that's a breakout and a pullback to the breakout spot, which is bar 1 high. Now we need follow through. A follow through bull bar would be wonderful. What if it fails because of the upper wick? Well, you don't want to see bears closing below the 79%. If they do, that's a problem. They're going to buy underneath bar 5 to break even and exit out. Otherwise, this bar closes bullish. We're going to get above this. We're going to get there and possibly there. What happens? We can't. Well, then you're going to look for a bear bar. Buyers are waiting underneath to break out bar 5 probably. If in case this fails, we're so close to the news, about 4 minutes or so left. Bulls need to close above bar 5 high to continue in the direction if they want a breakout, because we managed to stay above high of yesterday. But if we don't continue, then that's bad news. And you're going to have to maybe then exit. But this is a pullback now, breakout pullback, and the buyers could still come in. I'm still looking for this. It's because of news. I think the market is waiting. But be careful, you're at the high of a trading range. So they're trying to prevent, there's a wedge here, right? And this was a bull flag failing to break out from the trading range high, which is very common at the trading range highs. But it's better if we actually break out and trap the bulls somewhere above the trading range. So I'm still waiting for bulls to deliver my target, at least one of them, before the news. I mean, I deserve it, right? I bought it, so let's go. Keep an eye on the news. I mean, there's the Middle East war happening between the countries. Hopefully, some kind of a peace, truce, something will come in shortly. That this nightmare will be over. But please keep an eye when you're trading. Listen to the news. Fed's Bostic started to speak, so he just said something very dovish. U.S. economy is strong, and there we have it. We got my target. Thank you, Bostic. Me likes you. Here we go, that target. Wholesale inventory is coming in, so be careful. The next target is right there. Hopefully we will shoot up to that and possibly right there. So use this tight stop in case it does a nasty surprise. I'm looking for is 82.75 test. And then further up is 85. So my next target is excellent. Let's go. I just want to get the second target before the news release is in 10 seconds. 10 seconds, 6 seconds, 5 seconds. Come on, feel me right there. All right, I got it and I'm out. I am flat. I am not trading this, but it's trying to get, okay, we got my other target. Says scalp 1 tick below, which is great. This is the next target. Probably we're going to get there, but I'm flat. I'm not going to trade the news. I already made a significant amount, and I have a habit of avoiding news bars for a good reason. But that was the target. I got 3 out of 3. I'm sorry, I got 2 out of 3, but I didn't get the third one. It's because I'm a chicken, so sue me. I am so not touching that news. Can it go higher? Yeah, I think the hourly bar is trying to get there, right there. So we could overshoot that. And we might even continue, but this is where the seller is probably waiting. We got a measured move target from the structural breakout. but we might need to pull back because this is a breakout, or you can have a rather like that didn't matter, did it? That didn't matter at all. But anyway, they're taking profit here, so you should too, because it's also 20-point profit taken, but it could continue to go higher. Right now I'm flat. I got what I got, and I'm very happy about it. So how you guys doing? Hopefully nobody's sold. I try to keep you guys from selling prematurely. Right around here, there was no bear breakout. They tried, but that was up, down, up and down, two-legged move, and basically trap. And this, I said, some kind of a confirmation for, so I bought it anyway. And we got a little bit of hiccup there, but then we're up. So you could see some already bought above or the close of 6. Beautiful close anyway, you should buy it. And it goes higher. So even if you didn't do anything and you bought this, right, this would have been a good 3-point scalp, and they got 4. That should have gone 425, and it did. It went more than that. All right. So now, if we get a reversal somehow, we could end up coming down and testing these areas again, but I'll think about that later. Right now, it's bullish. It's a bull breakout. That is not the way to measure. Measured move, you should use that, and that is the measurement. That's what they're trying to go. So you should hold it. 88.50, 1 tick front running, possible. 88.50, or just hold it. You might even overshoot it. So that's your target. Excellent, Andrew. I'm glad that you fixed it. Logan made some money, seems like, and he is on his way to work. That's good. Benji made some money. Benji is using indicators. So what are we going to do with Benji? We're going to send some love. Don't use indicators, Benji. You don't need them. Just read the books or take the course. There you go. That was the measured move target. I know, that's okay. I'm just kidding. You can use, but don't go crazy, everyone, with indicators, okay? Indicators should give you an edge, but not having you make decisions because they lag. Everything is in front of you right here. And I think that's what he's doing. He's using it to have an edge, which I would understand. I used to love finding indicators that work together. And I actually trained a few people who didn't really understand, didn't have time. They were just looking for one good swing, and I would put together indicator work for them, explain it, how to use, and they would do fine. To this day, there are people out there still trading with indicators that I have trained, so I don't blame you for using it. But it's better to focus on look at these bars. I mean, momentum is beautiful. Bars are getting bigger, upper wicks are getting smaller, although we have one here, but that's a profit taking. So you can see how strong the bull buying is right there. So you can't really think of reversing this just yet. Okay, I'm going to get rid of this now. Now, what else can I look for? Well, there's a really 3-bar here. It's actually really nice. You can look for a 1-to-1 target, and that's 1-to-1 target for bulls. Because up until bar 5, well, bar 5 is a breakout, so you can also do this. Okay, so that's your 1-to-1. They might be looking for 1.5, and if they can close above 1.5, which we don't have, you see, this is where it gets a little bit dicey. But if we get a bull close, that means they're going to go up to 2-to-1. But this is where I monitor 1.5 and see what's happening. So we're so close to the 2-to-1 target if you measure from there, right? So if you measure your stop here, then that is your 1-to-1. I'm sorry, that is your 2-to-1. And we might have Just got the one closed above it, so you can see where price is going 1.5, and it's trying to go to 2 to 1. But institutional resistance from around 89 to 91 area, so we're trying to test at 43.90. We might actually come back down from there. That's why it's probably 1.5 there. So that's 1.5. So we haven't even reached it. So we might actually reach there. But if we fail to close above it, we could actually pull back suddenly. But we got a really nice gap. Market is trying to go higher. We've got a measured move target there. There is more room to upside on the hourly. What else is going on? Oh yeah, the August low. Trying to reach there. I don't care about that anymore. Target there. 4,300 round number. Market is trying to reach there, but I want to see what will it do at 43.90 and 91. If we close a bull bar above 91, then yes, we will reach 4,300. In fact, 43.95 will be my target. So only if we close above 43.91, I will expect follow through. But I did say, watch out, 43.90. We will test, and we just did. We are so close from the 1.5. If we do close a bull bar right around here, expect 2 to 1 target. That's 2 to 1. And that's 1.5. They're trying to expand the profit taking possibly, but failure to close above. Remember, you're in institutional resistance on 5-minute ES chart, which is an important area. So you should pay yourself, but if you do see a bull bar closing above 91, then expect 43, 93 to 95 area test. So why is that an institutional resistance? I call it in that area. I have taught you guys this in an extended session. Hopefully someone paid attention. Why is 89 to 91 area, that 2-point area, is an institutional resistance? It can be a support too, but in this case it is resistance, and that's why you're getting bar 8 high. Confusion. I guess nobody knows. It's in between. Okay, how does S&P move? How many points S&P likes to swing minimum? 10 points. So that's that 2-point area, whether it's a resistance or support, it's in between every 10 points. Why does L say initial scalp is 4 points? What happens after 4 points if the bulls and the bears actually get a 5-point? They're testing that support and institutional support and resistance, right? Yes. So what happens if why do I constantly mark that 6-point to look for either failure or follow through? It's because they are probably breaking that support or resistance after moving additional 5 points. So when you get that confirmation, 6-point, which is 43.91. Why is 43.91 is important? It's the high of that institutional resistance zone high. Well, 43.85 plus 5 is 43.91. It's all math. So we are now tested with the high of bar 9 right there. So bulls are showing me literally signs that they want to break it and they want to get to the 2 to 1. Okay, so and they can do that, but they have to close the bar above 43.91. So it's like this. I know you guys are wondering what the hell is she saying? What is this now? All right, so right, 10 points, so that would be 85. Where am I? 91. Why 89? Because that's only 4-point scalp, right? Additional on top of 10 points the market may have done as it came all the way from down below from 75, right? So it's getting an additional right here. When it breaks, where's it going to go? It's trying to go up to here, but it needs to close the bar is above. Look, it reached the 90 in the middle of it, and it tried to come down but failed to close a bear bar. So now bulls are trying to close because that's where they're trying to go, the next 10 points. From bar 3 low, 20 points is 91.25. Would you consider it? I feel like you're selling me something. What are you selling me? Well, let's take a look. Would you consider taking this? Yeah, there's not enough. Actually, I won't consider it because this is not a bear. Well, let's see. I think we already came to the 20 point, which was here. I said, do you guys remember me saying that? We are now going to the 30 point, and the 30 point starts at 29. It's right there. So we could actually overshoot, but this is going to be my target. So I bought again, and I'm looking for is price to get to either the 29 or 30. It might actually reach 40 today. Remember, I said we're going to double this GlobeX range. It's probably trying to get to the 30 first. It will scalp there. Okay, but I'm gonna pay myself right around here. Probably sellers waiting there. But it will, since ATR is 425, it's kind of decent. It could continue to get follow through. It's a really nice bar, so it's probably going to get follow through. Bar 30 is your target. So I measured from the ETH. Now from RTH, you're going to have to measure here to here. That's not good enough. Therefore, you should be measuring from here. You're already at the 30 point if you're measuring from there. So that means they're trying to get to the 35 to 36. If they close above 36, then expect 40. But look what we just got, 2R, okay? Or if you're using this tool, that's a 2-to-1 and we're taking profit. Okay, but if we do close above it, we're going to try to get to the 3-to-1. And my measured move is right there. I'm done. I took profit. It can continue to go higher, but look where we are. I have these areas available to you, so you should just keep an eye and see, Rose got a pink zone there. Okay, so it's red, and that means sellers probably there unless they break it. But it's and then also similar, I need to pay attention and take profit, so I took profit. I exited at this area, and then I entered back in with doji. That's with trend, so it's obviously trying to get to the 2-to-1. And I scalped here. Could go higher. Bar 4 and 5, which one is reliable buy signal bar? Bar 4 is not reliable, but it's because of the measurement I was doing. You get a breakout bar confirmation with 5. The only problem is the weak breakout with an upper wick, but still the bar closed above the prior double top, micro double top 1 and 2. So pullback expected, and you can even buy the 6 if you like. You know, I even measured 1-to-1 for that, right? So if you bought actually late with confirmation, you're at the 1-to-1. All right, so they're trying to close another bull bar and follow through into 1.5. There's always money to make. I think 6 is a really good. That's a pullback with the 6 lower wick and a follow through. So even if you are spooked here and not sure what to do, but look, we closed the bull bar above high of day and high of yesterday, bar 4, and we kept the gap open. So bulls are obviously looking for higher prices. is, right? So probably 5 and 6, because that also presented a second entry long. Strong bar 9, we got a bunch of gaps here. There's actually a gap here, negative gap, and you got a gap here. So the bears want to start closing the gaps and come down and test the 8 high, which is that's the breakout point of 8 and 9. But if they fail, we keep going higher, right? So we came very close to the measured move target of Globex range breakout. Suddenly, if the bears actually start to show up here, don't be so surprised, but we are so close to a magnet above, which is August low. Now, here's my problem with this August low. I might have, let me check. Oh, maybe I did get it right. Okay. So it looks like it is right. Oh, no, it's not. If we get a bull close here above 43.95, we might follow through and get to the next institutional resistance. Now, where's the institutional support now? Who is going to tell me? If we do pull back, where can we pull back and look for a buyer? No, I'm not talking about the bars. Is with this kind of thinking in mind, this is the institutional support. We might actually come back and test this area. We might keep the gap open to the bar 8 high, and we could bounce again. Yes, Irfan is correct. Next, the one that you're talking about, 43.99, is the next resistance. I was talking about the support gold yard, but I knew what you were thinking as far as where we would go next, so that's fine too. But I'm talking about the support where we would pull back. If we do close a bull bar above the 95, then bulls will show us the way all the way to the 99 area, 43.99, 4,400. I did say 4,300. I was wrong. I'm sorry. I meant to say 4,400 round number. We're way above 4,300. Why did no one correct me when I said 4,300 is next? I meant 4,900. You guys should correct me. That's why we have the Discord. So it's 4,400 is next. Moose. No, don't be afraid. But now you understand, right? So when I was actually explaining, I was hoping that you would be listening to this institutional support and resistance, because I know you've been asking a lot. So hopefully this clarifies things for you. We need the break is above 95. So if we don't get it, it's still very bullish. I don't plan on selling against this battalion of bull bars, 1, 2, 3, 4, 5, 6, 7. But even though it's climactic, that's a pullback. That's partial pullback. We could be in a third leg here. Leg 1 pullback, leg 2 pullback, leg 3, and now we're going sideways in a barbed wire. So you do not want to trade this, because we have an inside bar, outside bar, now an inside bar. If it closes bearish, bears will get some kind. There's also a micro wedge, 1, 2, and 3. Pull back to the breakout, and they're trying to buy. If we get a bull bar, we could go higher. But if we get a bear bar, that could end up coming down here and test it. So if you are not seeing that 1, 2, 3 wedge top, 23, 25, and 27 high, then go to the 1-minute chart. And you can see it's right there, 1, 2, 3, and a double top now with 53 high. So I don't like 1 minute. I used to trade 1 minute charts, but I used to lose a lot too. So then I switched to 5 minute. All right, so bulls didn't really close above 95, but they closed the doji, so that's with trend follow through with bar 11. If we get the bar close now, then bulls are going to shoot all the way up to the 43.99 at the minimum. But we need to get the bar close. You see how easy it is to scalp the markets, right? So you got shallow pullbacks, and the market is with trend doji. They bought above it. They're going higher. 43.99 is still target. Opening range breakout. That's 1-to-1. Obviously trying to go to 2-to-1. Pit stop. I call these pit stops every 5, 43.95, 85, 75, 44.05, blah, blah, blah. So those are all, I call them pit stops. Market goes there and stops. There could be sellers there if it's coming from down below. It could be buyers there if it's coming from up above. So 4,400, we're almost there. August low is reached. Brad has been writing about this for 2 weeks now, I think. He has been saying is we're going to go test August low breakout test area. We are finally there. So what we have is a cup, double bottom, wedge, double bottom, trend reversal. We will get a pullback. That will be a cup and handle and a breakout yet again. I think market is trying to get up here to the 50 SMA, and if we start to get new bullish days, okay, then the EMA, 20 EMA, is going to go like that. But there will be some sideways and down, leg 1, maybe pull back, leg 2, pull back. We get a leg 3 breakout into this congestion zone, area of interest. So this is what I'm interested. 4,500 or 4,515 would be wonderful this week, next week. Wouldn't that be great? So let's see if we can actually get to here. But right now we have accomplished something important. So probably some profit takers there. But opening range 2R. What did we test? 43.99. Look, and are they taking profit? Yes. Can they go higher? Yes, they're taking profit. If you close above 99 with 1 tick, they will try to test the 4,400. I would assume if they fail, okay, we didn't close, but this could, bar 13 still could close inside the resistance zone. If we fail, I'm going to look for some upper wicks and a bear sell signal bar. I might get a chance to sell and scalp here. We could test the low of 11. First, there's a gap still here. If we close this gap, this is the gap market wants to close. So for bears, this is definitely target. 10 open. So this area is gap. Therefore, it's support. So this area is gap. Therefore, it's support. No signal yet. It's an inside bar. Bulls can still buy here. You shouldn't be exiting out of anything unless you see a good sell signal bar. If you get a second, can you talk about starting the count again after the initial 20-point swing? Yeah, I could do that. Just hang on. That's a 30. So it's profit taking. Market wants to go to actually 40. So let me mark the 40 first. Okay, that's what market is trying to go. Now, let's talk about, I'm going to count from here. Okay, so market got the 20 point. Right, but it overshot it. Right, so what are you looking for? You're looking for follow through. Then what is the threshold? 21.75.22. So I'm going to mark 22, just around it. Did we get a bull body close? Yes. Bar 8. Just buy it. It's obviously showing you I'm able to fill that upper wick of the bar, reach the 20 point, and now we have a quick profit taken there. And I'm able to close a bull bar, showing you there's a follow through, so the bulls are buying steadily. There's no one entering the market trying to cash into profit taking by selling. No one is doing that. Lack of sellers in the market, you got buyers. So it's order flow is bullish, and you get continuation. Also, gap bars. Initially, I would measure from here, maybe here. That was 1-to-1. And then there's another gap here. I mean, there's so many ways to figure out how to find 1-to-1. Oh my gosh, so easy. Here, look, that was the 1-to-1. You can even take that. That's the 1-to-1. Here, possibly here. Look at that. We also reached that 1-to-1. You can even take that. That's the 1-to-1. So there's follow through targets I can extend as I find gaps and, and extensions, follow through. You can see that higher low. So that's where they're trying to reach 44.01. That's it. We got that one too. See, this is why once I see these gap bars, there's no need to exit out. Market did not give you a sell signal bar. So where is it going? Is 2 times the opening range breakout from bar 1 to bar 6. So you take that. Bar 7 is a news bar. There's some kind of reversal or breakout, and that's what there seem to be trying to get to. Oh, look, even on the Globex chart, I heavily marked that area, that possible area of interest with a bunch of price lines that I'm alerting myself that market might stall here. That something happened there before. Probably sellers were there. So therefore, that's where we're trying to reach. And for the hourly is we're trying to reach here, but we're at an important area. We have 3 bars, this hourly. What does a 3 bar represent? Some kind of a strong sell zone, right? So this is a bad buy signal bar. Therefore, some kind of a order block, right? So when there is an order block in the market, therefore there's some kind of a bad buy signal bar. That means some buyers are trapped there and then dumbfounded here, bought a little bit, maybe exited out, maybe they didn't, I don't know. So market is coming back to, institutions are coming back to where they actually place that order to buy and reverse and trap the buyers. They're coming to get their investment back, money. They don't want to throw that out. So that's why we're stalling here, because better if they actually go 1 tick above that bull bar high. That means they collect every dime they threw in the market to trap the traders so that they could sell like that and then sell the pullback again for the extended of time. Okay? Institutions never leave money on the table. If they trap you with an intended money, they have so much money budget to like buyers selling or placing sell signal bars in the form of bad sell signal bars. The Al calls them, right? So that's the money that placed in the market to trap you to sell. And those are the buyer institutions who are buying and wanting higher prices. They will do that. and then they will come back and get that money eventually. Congratulations for finishing the course. Don't be shy. Take it again. Always go back. We all do. I always get a refresher, something that I may have missed, or I don't know, fall asleep maybe watching. But watching for the second time and the third time or the fourth time, it really is going to resonate. And then what I do, here's my, this is what I've been doing for some time. I go back to the book. I find the exact same chapter, and I look at my notes or my highlighted areas, or I read the entire chapter once again. Once I read the chapter and go through the examples that Al has, chart after chart after, some stock charts, some S&P charts, he shows you everything. And that's how you're going to become a solid trader. So definitely go to the books, find the exact same chapter that you watched the video. It's gonna become bulletproof, I think. That's how I do it. Okay, I'm looking for some kind of exhaustion soon. Market is still pushing through. Okay, maybe we might be getting that exhaustion soon. 44.05. We're approaching a pit stop, and we're coming down from down below from a broken institutional resistance. So they're probably sellers about what's above. That's the 40 point. So 40 point is at 0625. Just about. So it's right there. Good. Start with the trading the price action trends. Then move into the trading range, and then reversals is the third book. That's the trilogy. Now, you could read the bar by bar at the end of all of this, or I started with bar by bar. I love it. It seems difficult, but once you take into the course, you should be fine. So things will make sense. I'm not an options trader, Nicholas. I have never traded, not even one option trade that I have opened or placed in the market. So okay, they're taking profit already, but okay. So we tested one on my target, which is 44.0350, which is good, but I don't think I'm not going to sell this. There will be some sellers underneath 14, but I'm not going to sell it because we still have outstanding targets above. So if you sell right now, they will trap you. We're back into the earlier resistance, so it's now it could act as a support here. Now back to the question. I never place an options. Some people do look at that. Al is an options trader, so he does actually look at things. I really am not an options. I'm not the right person to look at the market and say, oh, there are a ton of, options trades here, stack, blah, blah. That's great, but I wanted to get into it. And then I said, I really need to master this before I get into options. Some people do great with options and not with price action trading. It's weird, but, everybody has their own niche. So once I have my daily income from the S&P chart, I never look at options and really, so I'm not the right person. See, you lost me at a sigma. I have my limitations, I'm sorry. I'm really good at reading the bars and the market overall. I look at the daily charts, weekly, hourly. But for some reason, I just irked from options. Someday I will, when Al writes that book and makes the course, I will become a really good options trader. And I'll come to you and ask you questions, Nicholas. That would be great, actually. It's the bar 6, Frank, is is basically the first 30 minutes. Remember, 5, 10, 15, 20, 25, and 30 minutes. First half hour opening range, right? So we already have a breakout of the opening range, so I always measure that. So that's what it is. So I'm not buying anything here, obviously, but I'm still waiting for 40 to hit. I'm already long, so I'm waiting for 40 to hit 40 point area. So I'm looking for bears can get a bear body here, but if I start to see buyers, okay, buying the close or underneath the bar 15, that means all there will be here is some scared bulls exiting, and some are actually exiting underneath 14 or with the first bear bar. But there will be also buyers who will try to trap those sellers. Now, other sellers haven't really joined the market yet. They're sidelines. They're still watching. They know there's a 40-point big ticket item. We might even go 10 point above that. So they're not going to enter unless they start to see bears making 4 point from under bar 14 low. So you got 14, 99, 50. Anybody sold underneath that 99.25, they were entered. They're going to look for ATR is 423. That's not 425, so it's 4. So half the ATR is 2. So they're looking for approximately 2 point, but it needs to make 225 to give you a solid 2 point. So it might be just a 1 point scalp instead. Look, they just made the 1 point scalp. They just tagged the 125 right at the price point. Now, is there, okay, I don't know if it's going to come down to the 2. Okay, so see, it's lowered. It's now 3.3. So if they do sell, that's fine. They could be still trying to make that 2 point. That's because they calculated from earlier. So you could say, I'm going to go for a 2 point, and you got your 2 point. Because you already scalped the 1 point, you're holding. But you really are actually looking for a 4 point. So the market needs to go 425 to give you a 4 point. But will they be able to go there? That's the question. So what you do is you scalp the 1 point, you scalp the 2 point. Your stop is up here, right? So you're looking for 1-to-1. That's 1-to-1 right there. But you're also open to a reversal quickly. It's not, able to go further. It might go further because other machines are from the pivot level measuring, okay, 6 point. They already got 5 point. So they're looking for 6 point close, and they want a 10 point. So where's that 10 point? That 10 point is right here in the buy zone that I found earlier. Can the market get there? Well, first they need to close the SPAR, okay, 16, bearish, below this pink line, 6 point line. And then they have to come down here, give these bears who sold from underneath 14 looking for a 4 point minimal scalp. That's how L measures. If the bears get that scalp and we get another bear body, actually even exceeds that 4 point and closes around 5 point, that could get us to the 10 point. From the 9 or 10, this is where the bears want to go. But only if they close below this. If they fail, then all they got was a 225. And anything more than that was nothing but an overshoot. So then this could go all the way up. Not able to get a second bear bar, that the bulls can actually trap the sellers, and other sellers who want to swing this may not enter until they see a second entry. So therefore, we could go up and test the 14 high. So it's very important what the market will do. I'm going to mark the 425 anyway. This bar hasn't really closed, so you don't know. Bears are still selling. Many did sell 1 tick underneath or the close of 15. So others will wait for market to try to get the 4 point, if not this area, or because that's 1-to-1. And then right around here, anybody stuck up here will buy, and they will probably break even with the pullback. So everybody is watching. Are the bulls selling? They might have started to sell because of bar 15 close. So they know some of the bears will actually, some of the bulls will actually start taking profit because they will be scared. But there's a channel. This is the first channel trend line, and this is the first one that's been broken. First time that's been this trend line being broken. So we know there are faders waiting to fade this. So those bears will be quick to take profit around 425 most likely. But bears are trying to close a bear bar, so they can not only get the 425, but they can also get a 5-point from under 14. But those machines who are actually calculating 10 points from above 14, then the target is right around here or 1 point above 10 point. So this area is where market is trying to get to. So no other bulls will buy. They know, they calculate, they know where the bears are trying to take profit. Until they see a profit taking and a strong bull close, they may not enter the market or scale in, so they might wait. But if this bar suddenly closes above 6 point and bullish, then all those bears will exit and the bulls will bring the market back up here. This is the first break of the channel. So when you're buying, selling, with the first sell like this, you have to be quick to scalp because it could reverse back up. So they're still scalping, they're still pushing. They want the 4 points, so it has to go 425 to give them a 4 point. If they cannot get it and this bar closes, all these bears will exit. This bar did close 1 tick below the important area. It's a pullback, and it could still continue. Now it's a leg, but it's also part of it is a pullback. And you have 2 bear bars. One of them did close on its midpoint. So bears probably want a second leg down. There might be some sellers above 16. I don't think bulls are buying just yet, but we did get the 1-to-1. That's another reason why we bounced. So this was 1-to-1. But one thing that the bears failed, which is this, so now they want 4 point. We might get that second leg. There were probably some buyers at the 1-to-1 knowing that these bears will take profit, so you're getting this pullback. Probably sellers above 16. They're trying to get back to the 14 close. There were buyers probably bought and stuck, so they're trying to get to the 14, not close, 14 low. So we're at the 14 low. There might be some sellers here. If there are no sellers, the market will show you that it wants to go all the way high here. And if it goes all the way there with a strong bull close, then expect the 40-point test, which is right here. So some bears will either sell above, no one's selling above 16. There might be some sellers maybe above 15. But if we start to close bull bars, then you see how dangerous this was to sell. So all you got really there is a 1-to-1 or just about solid 2 points, but you really didn't get 425. So if those bears exited, that's why you're getting this bar here. That's because we have an outstanding target right there. I don't sell this. I don't sell against a climactic move like that. It goes sideways, okay? Bears try to put a gap there. Now, where's the second leg? They will sell. They will sell at this high. That's a high one, but it will be, okay, a failure probably. It will be a quick pullback to create a high 2. That will get you to here instead very quickly. So this is the area where the sellers are now, maybe a couple of points above bar 15. But if this bar takes out the 14 high, no one's going to sell. This is going to be just a pullback and follow through. I have a measured move target. That's 2 times the opening range measured move target, so 2R. But I warned you, if anybody sold here, they're selling. They want this to come down a little bit more so they can exit out because they know market is trying to reach there. I don't sell into this. I'm not after a 2-point. I'm still holding this long into here. Some bears are still trying to break even by selling at the high. They're looking for a second leg. Can it sell? Can it start another leg down? They're trying to get a leg down, second one. So, but there's no bear bar, right? So you can't really assume that this is going to reverse suddenly. You can see selling above 15. Now they got their break even. Brought it back up to 16 high. They have to close this bar really down below and then get another bear bar. Maybe sell the close, or sell the close here and get a second leg down. That's a second leg now. Okay, leg 1 pull back. Leg 2, they're trying to come back to where they got stuck. They're still trying to bring market down to here. I warned you about those sellers. And that's also high 1, right? High 1 is going to be faded. So bulls are looking for high 2. What do we need? We need a bad second sell signal for bears. Can this start to actually sell? What could cause this? I'm not interested in this anymore. This could technically still make the 10-point down, but we need right now, right here, bears to close below this line with a bear bar. Second time they fail, bulls can take over. But if the bears actually close below this line, because this high is not higher than that, so anybody who's calculating from 14 high, still wanting either the 9-point or 10-point test. Why do they want that? Because they originally closed the body below the 6-point. So they were actually on their way down. And they're stopped here because, look, breakout test, limit order buyers, and that was a 1-to-1. Some bears were taking profit. So something happened there. We don't care. Maybe order flow shift. They couldn't find any more sellers. So now they're going to sell the high again. They're either going to break even, and then they will try to close that bar. If they do close that body, then we're going to find ourselves right down here very quickly. But if they fail, we're going to get a high 2 setup for bulls. And then we're going to find ourselves at the 40-point. Now, some bad news coming up. And, well, already I think mentioned from the Middle East. So be careful here. We need inside bars to reverse. This is the first inside bar here, but it's not the official one because it hasn't closed yet. So there's 2.5 minutes for this bar to trap the bears and close a bull body, and then becomes a high 2. Okay, or it's going to close bearish, and the bears will get what they were going for, which is 9 or 10-point scalp. But if it closes bullish, no one is going to sell. And then we're going to find ourselves around 44, 06, 06.25, maybe even higher. Is that oil? Oh, yeah. I don't have the oil chart in front of me. Yeah. I mean, it's inverse head and shoulders, but it's just that you need to basically, let me show you that. So basically, what you're looking for here is you want this low to be higher than here, okay, or maybe there. This one is not all that higher, but from this distance to that distance, you do not need to put your stop here, okay? You don't need to put your stop here. When the distance is big, and you get bull bars now closing above EMA, okay? So your stop can be underneath that higher low. You do not need to put it here. And it goes up, comes back down. You look for a really good second buy signal and just buy it. It's going to go higher. I don't know what it did, but it's, you know, that's how I look at inverse head and shoulders too. So here we go. Where are the bears? They're not there. So this bar closes, you get a second entry long, high twos, but it needs to close bullish. What if we get a double top neckline 16 and then the bulls fail to break out and we fail to tag the 40 point? What's the problem here? Well, you should already know, right? What happened to 36? Did we close above 36 to get the 40 or 50? Okay, some kind of news coming up in 7 seconds. So that's another thing, is we could actually try to sell. We have a neckline here. This is not a good sell, but it's an inside bar. Bulls want to close above 36 point and get new highs. Bears didn't do all that well, but we get an inside bar. It's 18 bar. 18 bar, we get either follow through or reversals. Now we're all the way at the highs here, but we still have a target at the 40 point. So maybe we could go there and then reverse. Or if we get a strong bar here, then you have an inside bar. We might still come to the neckline, but bears need to take out the neckline with a bear body. Then I'm going to look for bear gap bodies and then moving underneath the EMA. Okay, so either there or around here. Then I'm going to look for more bearishness, but I don't have it right now. So I'm still holding this long. There is a triangle. We might need to test the 16 low, but if we fail to close a bear bar below 16 low, then this is it could give us a double bottom, and we could go and test it 17 high and 14 high. So you are at the apex of a triangle that might be trying to break out to upside still. Bears need a bear body here. If the bar 19 closes on its low, then they will sell it with the hopes of testing the 16 low. But you don't get that, then first sell and the second sell fails as we take out the 18 high. That's failure, okay, so failure, and we could get a couple of legs up again. Bulls want to test the 17 high. They want to get a breakout bull bar. They have a target here. Also pit stop. 44.0625 is 40 point. You might need to test that. Profit taking may begin 1 point below 0525 as early. Or if we fail to close above 36, then we could start to sell. But it looks like it wants to go higher. Especially if we get a bull bar here. That's going to be follow through and a failure of second sell that they try to put in. And then we'll get to my target. Or targets. If bulls fail, look, they've been trying. They tried. If they fail to break out, then the bears will take over. So we're going sideways with some inside bars, but no bear closes that are significant. It's the overshoot of a trend line. Bulls bought it and they're trying to fade it, but they really need to take out the 14 high. And in fact, there was a trend line here. Bulls also took that. And now they have first buy, second buy. That's high 2 above 18. So they want to test the 14 high and further up. But they need to close above 14 high. There might be buyers there also. Those who bought above 18, one tick above, they got filled around 44.01. It needed to go 01, 02, 02.25. Market came to 02.25 and everybody made money. So the bulls are still making money here by buying above bear bars like 18. So they scalped that 1 point. They might be looking for more. And I don't have the 36, so I'm gonna, okay, so we did close above the 36, so that's it. We're bullish, so they want to go to the 40 point. See how that worked out? What happens if we make a perfect double top here and then suddenly we get a strong bear body? I might want to sell it, but I don't know yet, so I can only speculate and cannot take action just yet. So now this is the trend line. If the bears break this trend line, then they can sell, but I would want to see a really strong bear bar. Otherwise, this is going to go higher. The really strong bear bar. Otherwise, this is going to go higher. Target above, we're so close. Just 2 points or 3 points. That's all we need. Bears trying to prevent a breakout from 14 high, get a double top, break this trend line, and sell. You can't sell it until they show you, so you should stay in your long if you're still long. Still no breakout, but that is follow through of second entry long above 18. And some did buy above 14, so there you go. See how that broke out, now reaching my targets right there. I'm going to scalp here, and I'm going to leave a runner for additional 5 to 6 points. That's a 5 point right there. So I'm looking for scalp of that as well. If they do close one, that's great, but if they can't and suddenly we start to close, but look, that's spike pullback. They might buy the pullback, and we could still go to 5 or 6 point. I'm going to mark the 6 instead, rather than 5. But I did pay myself here, so it's overshot the level everybody's getting paid. If we close the bar on its high, we'll go further up. We could get a 10 point, 20 point, who knows. But this area is important on the Globex. I marked it that there were sellers here. That's why the color of the lines are red, because there were sellers before. So we know there are some sellers might be still getting activated. But the bulls got a target on the hourly. They're trying to reach the, I think, 24.75 area. And that's about, just about additional is 19, 20 points. Might actually reach there. But we need to close a bull bar here. So we could end up going there. Market doesn't need to stop here. But everybody's taking profit because it's a bunch of targets, 40 point, 2R. Now, when you start to get these upper wicks, they're large like that. That means everybody's taking profit at the market. They're either hitting close or sell market, whatever. They're taking profit. And when an accelerated profit taking happens, you get these big wicks. So market could get maybe a small leg or two down, or it's going to be a failed leg down, and the bulls will show us more momentum and buying you'll know if market wants to go up here or here, they're going to have to fill this upper wick with a bull body. If they fail, this could come down to the trend line, which is right there, and we could find buyers at the trend line once again. But if there is no bear body, you should not be exiting out of your long, because we could fill that upper wick with a bull body and get follow through. So other bears are waiting now. They see the accelerated profit taking, but where are the bears? Why is this not selling? I need a bear body accelerating down. Okay, wanting to close and take out the 20 low. That's because there's nobody to sell. So if there's nobody to sell, we could suddenly fill up that upper wick and then reach here and then furthermore up 10 and 20. I don't have the 10 here, but the 10 is somewhere in between. And then we can get the 19 or 20 still. So this resonates, this target, with that target on the hourly. See why we're still bullish? So I used to be, oh my gosh, look at that selling. Sell, I would hit sell. I would sell with like 5 contracts, 6 contracts. And then suddenly I get this bar, I'm a total loser. I've lost it. And I've lost a lot of money. It's the worst thing you can do. If you're not so sure that there is any kind of bearishness, or you should never be the first to sell anyway, right? You're retail. You don't have the sell power to move the market. So if you're trying to sell just because you saw an upper wick, that's a disease. Market makers want you to do that so that they can trap you because you're so unsuspecting and you don't know exactly what's happening here. They're already counting. They know they have their targets, right? So, but you don't. You think, okay, we'll reach somewhere. You should be taking profit here, paying yourself, rewarding yourself, and celebrating. But you should still be having, this is always in long. Market is an inertia. It wants to go higher. It has been go higher the last 2 days, right? So even with the deep pullback, bears are not able to sell all that much. We have huge gaps. So we're in inertia. We want more higher targets. Why sell against it? And especially if the sideline institutional bears, they're not entering the market. What business do you have selling bar 20, right? That's nothing but a profit-taking bar. So I've made those mistakes so many times to either blow up an account or half the account or more than half of what I've made before that day, or brings me back into red P&L, to learn not to do it, right? So look what's happening here. We'll start to show us again momentum. So they're trying to get a 5-point to 6-point now. So there's a follow through here. All right, so we reached the 6. This is where they're going to pay themselves, and you can hence the upper wick. Machines knows best, but closing above that 6-point, if we do close, that we get an additional 10-point from the 40-point. And that's going to be here. Only if we close above that 6 with a bull bar. So they're taking profit there because it's not guaranteed that they will be able to close, but seems to be so far. It's trying to go to 2.5 R. We're there, but really is trying to go probably 3 R, which is right there. I'm going to grab some coffee and be right back. I am still long, and my stop is right here, underneath 19. And if it closes like that, I'm going to put it right underneath, I'm sorry, not 19, what am I saying, 21. I'm going to put it under 22, just in case if it fails. So I'm going to wait for this bar to close. If they close like this, I'm going to tighten the stop. What if it fails? Well, we do have a wedge. 1, pull back. 2, pull back and go, and we have a 3rd push up. I just want to see a breakout here so I can get my coffee. I just want to move the stop, but I don't want to move the stop right now. All right, so 55 seconds left. If bulls close that, they're actually, Why would they close a bull bar here? What are they doing? What do you see? What do you see with bar 22 happening here? Look at the price levels. We're breaking something to get to somewhere. We're breaking an institutional resistance. If this body closes bullish above 44.11, we're going to get to the pit stop 44.15. 44.15 is slightly before 10 point. So we're probably going to test one tick above 44.15. 15.25 is 9 point. So that's what the price is trying to reach. All right, so they did close a bull body. I just moved my stop underneath 22. I want to scalp off 9 to 10 point area. I'm going to grab some coffee break. If it takes me out, I'm going to be banking a lot and I won't be crying about it. But I'll be right back. Well, that breakout is not all that good with 22. It's just a one tick, but still okay. There's a breakout test with 20 high, and there's a gap here still. Bulls can maintain that gap. Your stop should be down here. It's not up here because this is a breakout, but a pullback. And now profit taking is accelerating here with the open of 23 right at the close of 22. So it can actually come down and get me out, which is fine. But I'm expecting follow through here for bulls. Buyers probably at the high of 20. But it really extended up so much so that maybe 1, 2, and 3 wedge. I'd like to see a little bit more follow through here. But it could fail. If we get a 2-bar reversal with bar 23 closing near 22 open, market could start to reverse and we could get a deep pullback because this is spike pullback channel up with 1, 2, 3 pushes, and we could get a very deep pullback not only to this trend line, we could also break this trend line and come down and test the 18 low, 16 low, or start of this leg. But I'm still long. I'm not exiting this because there are still targets above, even here, 44.15 on the daily. At the minimum, we could get there. Yeah, that's cool. Do that and then send me a picture, Trader Chick. Like to see that one. You get an outside bar followed by an inside bar. Okay, so we have an inside bar here now. And bears want to test the, bears might be already selling here. They want to test the outside bar 22 low. I'm in danger here. Okay, so it's probably going to come down and test it. So I exited already. I didn't even let it hit my stop. I'm done. That out inside bar spooked me. Okay, so I am out. I'm out right underneath around here, slightly underneath 23. That's okay. If there's a bull bar, I'll buy it again, but I just didn't want it to hit my stop, so I voluntarily exited out. Now, if the bears actually take out the 22 low with a bear body, they could quickly come down to the 44.07 or the 06.75. I just didn't want to take that risk. But there are buyers waiting underneath 22, want to trap the sellers and go higher. But this is 3 push wedge top. Okay, so what do you do here? Well, the last bull bar in that wedge is right there. If we close a bear bar here, there will be buyers here, will push the market back up here. If we get another bear close, they will swing it down. Okay, so all the way to here, possible to 18 high. So it could start to sell. But if we close a bull bar above this midpoint of the 22, then bulls can show up. So I voluntarily exited out. Am I regretting this? If the spark closes above the midpoint of right there, like that, or closes a bull bar, oh yeah, I'll be regretting for sure. But I might still buy it and not be losing so much. I can make the money back, but I'm obviously flat right now, so because there's a chance that we could try to take out the 22 low, depending on where that body now closes. It's just too high, and the breakout 22 wasn't all that exciting. It was a one tick close above the 6 point, which is still decent. Bull seems to still want to get to the target. I just got a little bit antsy there and exited. You didn't have to, because we didn't even test that tight stop under 22. And we may not. We could just keep going higher. If we take out the inside bars high, probably buyers there waiting, or the 22 high. There's no bear bar closing. We did the breakout test, 20 high. I did say that we would test, but we didn't close a bear bar. So suddenly we could get buy to close bulls. If the spark closes like this, there's still 1 minute. There's still 1 minute. Then this wedge could either fail or it's not yet wedge, and we might get another new high into this target right here. Oh, there was a question. Sorry, I missed. Have I missed questions there? 44.06. Yeah, 44 is 06. You mean the pullback? Yeah. 44.0625 is the 40 point. So 07.25 to 06.25 becomes a support. That was the last bull zone that we broke above, right? So that was the 40 point. If we do pull back, we could still pull back there. There will be buyers waiting there. It's not yet decided, but market is still showing you. Okay, as I'm marking the charts, look, 24 slightly closed, one tick below the midpoint. So the bears still trying to get that move down to the 22 open. They want that's the outside bar followed by inside bar, but they need another bear bar. I didn't sell. I'm still flat. I want to see bulls actually take out the 79%. If they do close a bull bar, then I'll buy. You see this area right here is trap zone. And look, we just trapped the bears right there. So that's the first trap. Bulls were trapped right here, so we're probably gonna test upper trap zone. Bears waiting from here to here, so they're trying to get there probably. Better if we close above 79%. If we do, we become bullish. So I should have stayed here, but look how close it got into my stop. But I did say stop should be down here, not here. So if you use that stop there, then you were safe. And there's a gap here still open. Market is still trying to reach here, here, and here. Failure to close above 79, then bears can try to close below the midpoint again. If they do, then I'm going to be leg one pull back, leg two sell, and test of this area. So if the bears actually close below the 50%, I might actually see a trap of the bulls up here inside the outside bars range at the highs, and I might be able to actually scalp now, sell, and make money. But I need to see a bear close here, or close below the midpoints right there. Otherwise, I'm just not going to do anything because this can still go higher. But bear's trying to start a swing here with several legs. There's still room to upside. I need the second entry sell. That hasn't really set up yet. It's still a bullish market. It's still very strong. I don't want to be the first to sell when it's not ready to sell. When it's not ready to sell. I'm going to open soon the questionnaire box. So nothing to sell here. Like you can see right here, market is still trying to get a breakout. We don't have a solid breakout from the outside bar 22 range. So you can assume this is going to break out and go to the moon. You're still inside the trap zone. And there's still buyers above 22. I'm sorry, sellers there. But if you're not selling anything because you don't have a second sell signal bar, okay, so what are you going to do? We made a new high anyway. So you're either long or you're flat, right? If the bears can actually trap, they have to close the bar somewhere near 25 open or low to give us a second entry short. I'm not going to sell this because this could still go higher. We made a high, but is the market trying to trap the bulls with that one tick above? I don't know. They have to print a really good bears bar here. Otherwise, I'm not interested. This is a bullish market, and the bulls are buying every pullback here. So it's kind of a climactic, but small pullback bull trend. Okay, so the 50 is right there. Market is still trying to reach there. The next 10-point mark it's not really small pullback bull trend. It's very climactic with bunch of gaps, but it has moved quite a bit. So now, how far can we actually pull? If this is now look at that. That's becoming very, very strong. So if we take out the bar 22 low, we could get a breakout to my bear targets. But there's a gap here. Bears trying to close this gap. Okay. Buyers are waiting here. But if this gap starts to close, next is going to be bar 14 high. There are buyers here. This is a strong buy zone. We might come down and bounce, but I've sold nothing. I need a bear bar close. And look what we just did. Because you're in a limit order market, you buy low and sell high. Look, 21% is a great place to put limit order buys. Or the trap zone inside the trap zone. Inside the trap zone, limit bulls bought it, or closer to the 22 or the 21 high. Okay, so a breakout point. Limit order buyers bought. Then the pullback, because this is buy low, sell high, those buyers will buy again. So that's why I marked that area green, important. Now, if the bulls finally close a bull bar, we're going to get to here. We're going to get to here. Heck, we might even get to here. So I haven't really sold anything. Hey guys, when you're posting from these slides, these are like, if these slides are from open, public YouTube videos, sure, go ahead and post them because they're public. But please don't post anything from the course unless you're asking a question or the encyclopedia. Maybe 1 or 2 slides are fine, but not back to back. There seem to be some, like this information, order, stop, or limit. If it's directly from the course, please remove it because this information is not free. People need to subscribe to. But I believe Elle has some videos explaining, some things on YouTube that are free to everyone. If that's from that slide, then that's fine. You can keep it, no problem. Because not many people in the market understands the limit order versus stop order. And one of Elle's gift to us is understanding the conditions and being able to trade those. So I'm sure he would want to, get rewarded for the efforts that he put all that information together. So that's what the course, so people really need to find the funds and pay something that's already too funny, $399. Okay, you're getting an education that is going to make you a trader for a lifetime, and you're going to actually make a living out of it. So, sometimes, we get these members asking questions, but they're not truly members. They don't care to invest in the course. They don't care to invest in the books. They don't care about anything. They just want something, and they want to trade with it. We cannot guarantee that you're going to be consistent all the time. Just take the course, right? Learn from it in a structured manner. So anyway, what was I going to say? I was going to say something, and I went into a rant about it, but hold on. I need a breakout. I'm not interested in, this is really nice. That's high 1 and possibly high 2 already. So bulls are still pushing this higher. So these are my targets. Still. Could be final flag. Be careful because we've been pushing this for some time now. I just want the 10 point. So this is the next target, and we're probably going to tag that because if we're going to come down, that's it. Either here or we're going to go to 25, 44, 25, which is right around here. So, but we could get a sudden breakout. But I would want to see bulls actually get up here first. What if the final flag fails? Then I'm going to look for bear bars to sell. But I have no reason to do that yet. So this is still trying to get to the 10 point. Look, I'm measuring with so many different ways to give you an idea what is going on here. Eventually, we could pull back to 0625, 0725. Buyers are going to be there. But right now, we're bullish. We still have targets. Market is trying to get to these 50 point. There you have it. And if we're going to come down, we might actually come down from there. Gaps are still open. The first gap is now here. It's maybe even here a little bit. There's a gap there as well. Okay, so that's the next target. You may want to pay yourself there because we could fail finally. This could be an overshoot, an exhaustion. Because we reached the 3-to-1 opening range breakout. I mean, we haven't really tagged it. We're only ticks away from it. So here we go. Let's go. Let's go get it. This is great. I did buy that high too. I finally entered. And so this is a good grab for me. I generally one tick front run it, my targets. So I took that money there. But get ready. Bears could be up there. So you got to protect yourself. Okay. I don't know if I might have done a mistake there. Okay, target met. Sorry, this hasn't met yet. So we're probably going to test that still, but we've tested the 1625, but we should just grab that before coming down. But watch out, if we fail to close above 160-180, we're not going to go here. But if we close a bull bar, that's next. That's my measured move for the 22, and that's where seems to be market is headed. But first, 1650. Oh, yes. Actually, I said something I was gonna do and I didn't do. All right. I just opened the question box on the BPA chat. You can either post there or post here on the Discord, either or. I'm flat. Why is ETH 40 points? What does that mean? Why I got the 40 points from ETH chart? I'm sorry, I'm not understanding. And it could be very well just me because I'm tired. Be very well just me because I'm tired. Yeah, 0625 was 40 points. So we reached the 50. That's an additional 10 points. When I say, what did you mean by extended session? Do you teach somewhere else? I don't teach somewhere else. It's here. I guess what I'm saying here is that I meant the buying is extended, but we're getting to, look what we're making. We're going into some trading ranges, small trading ranges, and the breakouts are not all that good. So this is an extended buy, 10 extra points above 40. There will be profit taken a lot more serious than they did here or here. So I think that's what I meant. Sure, no problem. If you long multiple contracts above bar 26, how? Oh, let's go to 26. All right. We're getting a 2-bar reversal now because we reached. I'm going to clean this up now. We're getting a failure right there. Bears need to close a bear bar. If they actually take out the open of 27, we're going to end up coming down and testing this area, which is the 40 point. It's going to act as support, by the way. And here's the trend line. We're going to fall into this trend line. I'm going to clean this up. This is done. I'm going to get back to that question again. Just want to clean this up a little bit. Testing the breakout point. There's gap here. Buyers here. Early buyers are here. This is the first gap the bears want to close, and we could easily close. Buyers probably here, but if we break this, then we're coming down into this gap. So these are the bear targets if we start to sell here. Big inside bar. Now you have a new, so I'm no longer interested in this. I have a new range. Bears want to test the 27 low, and they want to get a breakout. There are probably buyers waiting at the low of 27 in the trap zone. So the question is, if you long multiple contracts above 26, how do you set up your take profit and stops? Do you move your stop after your first take profit hit? Bar 26. So it's this right here. You have to take a look at what you're buying into. There's not much room. You have been up. This is very dangerous to buy up here. Basically, I'm in a scalp mode. I'm not swinging anything. This has been up and up and up and up. It's now reaching a 50. The reason why I went long there, because there was a failed low 2 and a high 2. Okay, so I bought it. That's because I voluntarily exited before. My stop was underneath 22, before 24 got there. Have I regretted? Yes, I have. And maybe I should have bought again. But I waited for the second entry short and a failure. That's better for me to buy. And then whatever I left on the table, I made it back right there. So you have a very little room there to the 50 point. So what do? If you buy above this, you're going to put your stop underneath 24, right? Because you have a breakout, pull back, and the market can still go higher. It can still go higher before coming down. So it's not, we have a new high. That's first sell. We need a second sell. Now we have II. See, roll all the way at the highs. We also have a wedged up 1, 2, and 3. Now bears can sell here. Now you can put your stop underneath 28 if you want to tighten it, or 27. That's because you're so high, you don't want to take too much risk. That's what I would do. Because this can turn around and test and break out from 27 low. Close this gap, and then there's another gap here. In fact, that gap I'm just going to take all the way to here. This, we can end up coming all the way down here. I don't want to risk it, so if my stop's here, I'm going to put it underneath 27. And I'm going to hope that we can actually trap the bears right in the trap zone from 1140% to minus 1140. But if they breach the minus 1140, I am toast. I'm gone, because my stop is right there. It's the tightened stop, right? So, but some will keep their stop underneath 26 or 24. Breakout, bad follow through. It's a pullback. If we take these highs, 28 high or the 27 high with a bull bar, then you can take that stop from 24, tighten underneath here. I'm doing the tightening now because we have been up and the market already pushed with another leg. And if that leg fails here, because that could be the final flag, we could end up getting 2, 3 legs down, and I don't want to be stuck in it. Because I'd rather take a small loss and then reverse it and make it back down as the bears sell. So when you're buying this high, you always have to think, I'm scalping, I am not swing trading. So that's my goal. So if I'm scalping, well, swing and scalp, it's got a ratio, a bad ratio, right? So your stop is 2 times your reward if you're scalping. So it kind of is, look, if you put your stop here, right, you're basically scalping maybe half of that, right, which they kind of gave it to you. But where's your 1-to-1? You should be, can you get the 1-to-1? I don't know. We're so up high. Bulls need to close above this line, 79%, and then maybe they can get their 1-to-1 right there. So if they do that, that's great, but I don't know. It's just so high. So I'm always, when I'm up high, I don't linger. I just take whatever I can with the 50 point, and the opening range 3-to-1 was target. There's a little bit more room to the upside from the higher time frames. You can see market still reached the 24.75 or 24.50, whatever, or somewhere in this zone. So the bulls seem to be still trying to close above the threshold line. If they do that, then we'll go higher. This is the next target, and right there. So you can still stay in your long because we have a breakout pullback and the buyers are buying, but we need a breakout bar, taking out the 27 high. We do that, that's the next target. You should scalp and give yourself a reward there and hold a runner into here, maybe possibly there. So no second bear bar. That's it. That was just a pull back to the breakout point, and the bulls just got my first target. They're going for the second and a 1-to-1. So this is how you can go for a 1-to-1. Only if you put your stop under 24. If you put it under 26, you already had your 1-to-1, so you just exit. That's also the same area as first target. If we do not close a bull bar, we're not going to go up there. They're scalping. So you got a nice demonstration there, actually, with the bar 26, as I answer your question. Live demonstration. Okay, next question. Oh, thank you, Matt. I appreciate it. So I'm giving you a virtual hug from here. Picture me hugging you. When entering a gap like the daily gap above, is there an expectation we should have to see if we might reach the upper gap or close the gap 44.1575, 44.4425? This is a good question. So let's take a look at the daily chart. So the way that I measured, so this is the gap that we actually talked about this earlier at the pre-market, and I said market is trying to reach the 99.25, which is the August low. But if we do get above it, okay, that means we're breaching. That's because this is the gap that they're trying to close. And I said with this day, which is September 20, they're trying to test the lower third of this bar after the gap close is right here. So it can actually extend. I don't know if we're going to be able to. That's a lot. That's a lot of move up, by the way. Okay, is right here. And I said market wants to thoroughly test the 50 is SMA, but that is far. Look, 44.17, add another 50 points. Can we go up 50 points? Well, we're going to have to close this gap. Somewhere in the middle of this gap, probably sellers waiting. So we might be trying to get to 44.30 area, or is we're going to get to the close of this bar. So that is 44.44. That's where you got yours. And that's what I said, is they're going to try to close this. But you have a gap here. You got sellers here. So on the 5-minute chart, I'm counting. We were at, where were we? So 06.25 was the 40 point. So I'm counting the C, where can we actually fail? What did the market do here? It tested the 10 points, look. 10 points, and it's trying to close a bull bar either above 10 points or somewhere 11.7. I'm going to mark 12. If actually this bar closes above 10 points and another one opens bullish, then we don't have to stop here. We could just go up to here or 15-point area. So market is still pushing. This is now small pullback bull trend. Could last another 30 minutes or so, perhaps. Bulls are still pushing. Nothing to sell here yet. They failed here. That was a high 2s, pullback, or maybe then high 1 again. Pullback, they're looking for high 2. But now we have a new high, so high 1. So you can see how they're buying every pullback, every bear bar, okay. And it's still trying to go higher. Next target is if we close somewhere here another bull bar, look for 15 to 20 point. But look at the bars. So let me get rid of this. Look at the bars. The quality of breakouts are now not all there. And we have another wedge. Spike, pullback, channel up. Now, another inside bar. If this is a small pullback bull trend, right, you don't want to see this bar close all the way down here. But we do have a wedge again. And we have kind of accomplished that 10-point additional. I'm no longer interested. Look, I'm only going to be interested either staying in my long or adding to the long if we actually close above this 50 point or further up 51, 52 point, and the market can go another 5, 6 to 10 points up. If the bears start to close strong bars here, you got a wedge top. The last bull bar is bar 30. Measure the bar 30, find its midpoint. If bears actually close a bear bar below that midpoint and open another one, they will sell. An inside bar, okay, like this, could sell this time, actually get another leg or two because of the wedge top. So I don't know how much this is exhausted. First, this bar needs to close bearish for you to even consider exiting out of your long or even selling. This bar is trying to close above 50. So where do you think it's trying to go? It's trying to go to 55. Where is where is the next institutional resistance? 44.19 to 44.21, right? Bulls are still trying to test the 44.19 to 44.20 midpoint, 44.20. So we get another bull bar. This is going to keep going up because this is small pullback bull trend now. It was really strong. They bought the first pullback. They bought the second one. Bull flag, double bottom, high 2 is with a huge gap. But look how many bars we have been up and about. It's been, gosh, 25, almost 30 bars now. No, 25 bars, right? So we're due to pullback, but it's small pullback bull trend. Where can the market go? I'm going to clean this up. I assume you have your own levels. I want to clean charts. Where's market going? We have a gap from the open, guys. A gap from the open can buy all day long. The first pullback could actually buy, okay? And we could keep going and going and going, okay? So be careful here. This thing is very bullish. Look at the ATR is low. They're steadily buying, okay? So institutions are buying. They're trying to reach somewhere right there. Or they're going to keep buying another 50 points, and they're going to reach, actually, not only they're going to close that gap, and they're going to reach that 33%, which is that red line. That's a 50 SMA. So this could still last longer. There's nothing to sell. I kind of regret getting out of 22. I scalped there. I might actually enter again if the bears won't show up here. But if we start to get bear bars gapping down back to back, I'm going to expect price to come down to the EMA. But there's nothing here. So let me take a look at the encyclopedia a little bit. I'm going to close this. Okay, we have a nice strong inside bar again. Let's see if the buyers, since this is a small pullback bull trend, probably buyers is under bar 31. But there's a wedge here. 22 is 27 and 30 high. But small pullback bull trends, they last a long time. Now, I want to take a look at, here's a bull trend lasting all day, okay? They're buying the high 2s. They're even buying the high 1s, like here, right? So they kept the gap open, and this lasted all the way to maybe bar 50. Okay, so, and then first pullback, they buy again, and towards the end of the day, I'm assuming, so it's how many bars? So let me check something here. So maybe around bar 60, 62, we might get a reversal back down, testing this area. Okay. So we could end up having this day today. Look at how strong this is. So bull trend lasting, micro channel. So we're kind of in a micro channel now setup. We're not as, this is the most difficult one. And I'll tell you, this is actually pretty rare. This is also rare too this day. So you see something like this, you're just not going to exit. It kind of shook me out here, but then I start to see it's trying to go to 80 point. It's now at the 50. It wants to now get the 60, 70, 80. So 80 point is, let's see. That's it. Look, that's right around the gap close. Couple of points above. So market is still trying to get there. Now I don't know, but it is small pullback bull trend at the moment. So let's go to gap up. When do I start to exit? There are probably buyers here. Be careful. Buyers there, 24, 25 for I'm sorry, 22 high, or all the way to 24 low. Those buyers will try to keep the gap open no matter what. And look at here. We don't have a big gap up, but we do have a gap up, and it became big, right? So look at this, steady buying and accelerating. This is around bar 50, probably 48.50. We finally got a swing down, so that's another option. Or somewhere around bar 60, we test underneath the EMA, and then we go again and close the day above the EMA, just like we did yesterday. See, open gap. Finally, we come down, but look, it's a failed flag, bear flag, and the market makes a new high. And then even at the end of the day, it buys underneath the EMA. So it's been already 32 bars. We may not reverse back down before bar 40. Midday reversal, we might actually get a couple of legs down to the EMA, but be careful, buyers will be waiting, and the first touch to EMA, literally one little touch, can buy and go like that, either here, here. Okay, if we get a double top, but we don't have deep pullbacks, you see these deep pullbacks, finally, because machines are seeing clearly, okay, but here it's very difficult to see. But here they see the deep pullbacks. Those deep pullbacks create magnets. Magnet, magnet, that's why we tested. Then we broke it, so we have a trading range from there to the breakouts and a measured move down. That's not what we're doing. Maybe we're doing this. Okay, so I don't have a big bar. You see that big bar right there? You see that big gap bar? You get a bar like that, that's going to create a trading range. Market will go sideways. Okay, so that then becomes a double top. Okay, first sell and a second sell. Okay, so then you look for a couple of legs down, maybe leg one, leg two, and then you still look to buy. But the problem here is that bears will try to sell every bear flag they see. But the problem with this, you have a wedge here. Okay, so maybe one, pullback two, pullback three. You have a wedge there with an undershoot and an overshoot. So you got a failed breakout, and a failed low too. Failure of a failure gets you several legs up before, okay, it finally gets a double top and a neckline. Then you look for sell with big bear bars like that. But otherwise, look, failure of a failed breakdown or a flag, and first sell and a second sell, failure, big bull bar, you're going to buy. You can buy the pullback if you like. Okay, so you're going to play into failed flags. And then that's your first leg. That's your second leg. That's your third leg. So we can get that instead. Anyway. So market is bullish. It's a small pullback bull trend until it's not. This could last for a while. Probably bar 40, we might finally pull back to EMA. And I'm going to look to buy the EMA. Unless they show me a strong sell, then I'm not interested. Okay, I am done with my session, everyone. I think I might have missed some questions. I'm sorry, I didn't look at here. Let's take a look. Frank, where did you post your question? Do you want to send it to me? Just send me a message, and then I'll answer it that way, since I'm going to have the whole afternoon. It was just too high, and I wanted to answer questions, I think, because it was around 11:30, so it was around the questionnaire time. But and then I entered back again, long, scalped, and the market is still going higher, but it's getting to be too high. But you shouldn't exit. It's going to keep going until it's going to show you one big bear bar or 3 bear bars back to back with some gapping. Then you can exit, or you can hold and buy the first pullback. If we're not getting any gap bear bars underneath the EMA, then we're not selling. You can buy, get an average price for that, for what you got stuck with up there. Oh yeah, I mean, everybody knows that, right? So now there's never a day that 99% of the time we are going to test that EMA. Whether we will test it after bar 40, or we might even come down around bar 40, we might test it, and then we get another swing. There's nothing here. They're buying every single bear bar. They're buying above the bear bars. They're buying the next inside bull bar that comes after the bear bar. Small pullback bull trends. You could just buy the pullback until you no longer can buy. Well, this is still going, right? So market is, let me see. You get when I said earlier, I said 20% chance, actually 25% chance of early reversal. We got a really nice. They were selling, and then we just got continuation. So eventually we will go sideways and down, but I believe they will buy that pullback again. So I mean, if you're long, don't exit, but pay attention to any strong bear bar, okay? And then if it gets another bar or 3, can we actually start the sell and pull back 50%? So you can measure from here, that will be your 50% pullback, or from here. That's only if we close a strong bear bar. Maybe couple of ones, okay? Get another one maybe here, and we'll do a pullback. Then we could sell in here. That will be a halfway back, okay? So either from here or you measure from here to here. But I don't see it, so I'm not interested in. I'm gonna let this keep going higher, and then I will, like for example here. We don't have a big gap up, but it is gap up. So It keeps buying, 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 buying. First pullback. First, that's that tiny pullback. They buy it, and then we get a final breakout after test again. We break that channel line, but that's it. So can we get this? That's what I'm looking for, but that's not good enough. It's only 2 bars. I need 3 bars with gap in order for bears to actually move underneath the EMA with a gap bar. Then I would look for a pullback to 50% of the day's range. It's not there. So here are your probabilities, Manja. If you want to take a picture of this small pullback bull trend, could last hour, 2 hours, hour and a half. So take a look at the hourly. Okay, 12:30. So we're getting closer to 12:30. We might finally see maybe around bar 40 some kind of pullback to EMA with maybe 8 to 10 bars, 10 bars, 2 legs. And then around bar 50, 48 to 50, we get another swing long. So until then, don't sell anything. There's nothing here to sell. So 12:30, pay attention. Into 1 o'clock, we could finally get that 2 leg to EMA. And then around is, or maybe we're going to keep going all the way to 1 o'clock. And then around 1:30, we might get that touch and go. But nothing to sell here yet. So we had a double bottom, 1 and 3, higher low 4, and a breakout. And then small pullback bull trend. Tag is we have touch, 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 or testing underneath the EMA before breaking out again. All right, we're getting a gap bar now. Now, if this bar closes, okay, so 12:30, we're getting to the 12:30. We might actually finally reach. Remember what I showed you? A big bear bar finally gets moved down to the EMA. Now, I don't know. There is a still breakout test area. That's where it's trying to test. But there could be buyers there anyway. Don't exit yet. You need to see that it's becoming bearish. You can measure. You can measure to see how much the market is moving. Now, bears really need to come down and test 44.13, okay, 1 tick underneath this breakout test and close a bear bar. So they need to literally close a bear bar there if they want to come down 10 points. Okay, so 10 points, it's 44.09. 44.09 is right at the EMA, literally. Actually, I'm wrong, sorry. Slightly under, like a couple of ticks under. So if we get a bear bar here, market is going to move to the EMA. But we're creating a trading range. We could actually test the 26 low and still be able to bounce. That will be the trading range low, right? So you buy there, you expect market to get back and close that bear gap. Now, what if the bears cannot close below 1325, meaning they cannot close a bar at and below 44.13? Then the buyers will buy right there at the breakout test, the close of that bear bar, and we're going to go higher again. But it is a decent bear bar. Taking out at least 3 to 4. Look at that. 1, 2, 3, 4, 5, 6. If they close the bar 1 tick or 2 tick below 1325, they will be taking out all of these bars, that range, and that could get follow through. So you don't know that. I said we're going to test that breakout test, which we did. Better if it actually closes that bar right around and then the bulls would show up right away. Or it's just going to close somewhere up here and it's not sellable. They're going to try to shake you out of your loan. Okay, so that's what they're trying to do. All right, I think I am done here, everyone. Just watch 44.13. If we close at 13 or one tick under, then the bears will try to get that second leg down to the EMA, probably buyers waiting there. Now, if we start to move underneath the EMA, okay, with a strong bear closes, that means you need to look for a bear flag at and around the EMA, and you can sell it. Then you would look for a pullback to the 50% around here. If you measure from the 76 from yesterday, 76 bar 76 low, or you can measure from the bar 3 low. But this isn't a gap bar, and no one's really buying the close of that bar. Okay, maybe they are. Okay. See, it's very difficult to exit out of a loan when market doesn't want to sell yet. But this bar is an outside down bar. Technically, it is. And it's taken out all of these bars. So some bears will try to sell and try to break below the 1325. At least look for a second entry. At least look for a second bear bar, right? So technically, this is a deep pullback. Testing is testing. What is it testing? Bears want to come down to here. That's a spike, pullback, and channel. Channel started here. This is the minimum they want to test, or the channel low they want to test here. Buyers waiting. If we do come down with 2 legs, buyers are waiting, and we could go higher once again. So they're trying to make a decision here. That's an inside, outside, inside. If the bar 36 closes on its high bullish, that's a breakout mode for bulls, right? It's not going to come down. But if they close it bearish, lower it closes, then we're going to end up getting a second leg to the EMA. Or the spike pullback channel starting point could be 26, could be 24 low. Bears want to test. But midday reversals generally around bar 40. Like I said, we may not get it. So it's 12:30 now. And why is this not? It's not showing my. Oh, there it is. All right, so there's 2 minutes left for this hour to close. Is next hour could still become bullish, and this is my target still. I did say we're probably gonna reach this area. I had an arrow, so we'll reach there. Could be good enough extension for bulls to finally come down, but I doubt it. This is what we're trying to reach here. All right, you all have a great day. Tomorrow it's going to be Tim Stout, and I am going to come in the afternoon. I will see you all tomorrow. You all have a great day.